Good morning. This is Mayor Valensky with Driving Markets. So again, I just want to reassure all of my listeners that when I do driving markets, either I do it very early in the morning where there's absolutely no traffic at all and I keep my eyes on the road, or at the moment I'm just stuck in traffic, not going anywhere. It's one long line. We've got cars coming from all directions and therefore there's no real movement. So I thought I'd take the opportunity to do driving markets. Let's just catch up where we're at. If you remember, I said last week that oil will rise. I said it will rise, and it went to $113 a barrel yesterday. I'm no prophet, but I can tell you for clearly it is surely understood in the marketplace that when there is a reaction or global reaction to financial markets due to a geopolitical situation like Russia-Ukraine, and there is an extreme reaction by financial markets, you know that reaction will taper off and come back to where it was originally. However, there's only a return slowly to where oil was previously. It went all the way back down to $93, $94 oil, and now it's bounced back up to $113. Please note, Mayor Valensky, Driving Markets, undo my button, Driving Markets is quite clearly saying that oil is going to go well above $150 a barrel. The Europeans are now going to put sanctions on Russian oil exactly like the Americans. I'm surprised they haven't done it so far. But you know Europe, it's always one step behind. Then you had a Houthi attack from Yemen on the Saudi Arabian refinery that also frightened financial markets. And then you've got overall supply problems globally regarding oil. So that's pushed the price up. You will see oil rise from here all the way up to $150, $160 a barrel. And that will have significant impact on financial markets. Sorry, we just moved on a bit, so I stopped the recording for a second. Now we've stopped again. So you've got further factors. Another factor, let's get back into driving markets. Another factor was that Jerome Powell, the head of the Fed in the States, had a meeting with the National Association of Business Economics, and said as follows, that inflation is much too high. Quote, he said the words, inflation is much too high, and we will take aggressive action to combat it. Now we're talking about a minimum of six increases this year in the States. I'm talking about 8 increases minimum, and he's talking about already maybe 50 basis points. I've been talking about 50 basis points for well over 6 to 8 weeks, that we need to increase interest rates by 50 basis points. It's not depressing. Some viewers are saying my driving markets are depressing. I am here to be informative. It's not a matter whether it's depressing or not depressing. These are facts. To get inflation under control, we need to increase at each MPC, which is a UK meeting, or in the Fed FOMC meeting, we need to get interest rates increased by 50 basis points to combat inflation. If we don't do that, inflation is going to run riot, and already the central banks are behind the curve. What does that mean, behind the curve? They're delayed. They're not taking action because they're concerned of what the effect will have on the economy and what the effect will have on financial markets. But they need to put that concern aside, and they need to get the interest rates raised. It will have an impact on mortgages. It will have an impact on your loans. Already mortgages in the UK, I know for a fact, have gone up since the last interest rate rise, and they're likely to go up further. So if you do have a mortgage, you should be locking yourself in for a good 5 to 10 years now at these levels, because interest rates will rise. We're on a 2-year cycle of rising interest rates. Mark my words, Mayor Valensky, Driving Markets, says we are on a interest rate rise. Just be aware of that. Furthermore, look at the pound dollar. Look at the pound euro. I think the pound is a good bet. I think it's a good trade to get involved in if you're an FX trader. As regards cryptos, I think BTC is a good one. Bitcoin, I think it's a good coin to get involved in. I think the cryptos is now looking to move forward. What else have we got? Disney shares dropped yesterday because Shanghai Disneyland closed down. Or let's rephrase that. Shanghai closed down all recreational facilities due to COVID-19. Shanghai Disney was shut down yesterday. However, in Shenzhen province, in Shenzhen, city of Shenzhen, Foxconn, which is a supplier of Apple products, reopened. Therefore, Apple yesterday went up slightly. So you've got a whole lot of movements in the marketplace. And if you look at the overall graphs in the last 2 months, the markets have moved down. The trend is down, but they're sort of steady at these levels. I think there's going to be a significant move downwards in financial markets, and you should be getting prepared for that, because that is my view. It looks like all the signals of inflation, interest rate, oil prices, raw materials are all pushing towards a drop in financial markets, higher commodity prices. You need to get on the bandwagon. You need to start looking at your puts. You need to start looking at your portfolio. You need to start taking protection, and you need to start to understand where we're going here. This market is going down, interest rates are going up, inflation is going up, and we're going to end up going into a potential recession. Not depressing. It's don't be depressed about it. These are facts. Get with it. This is Mayor Walensky with Driving Markets. Catch me on LinkedIn, on Instagram, Driving Markets, on WhatsApp. You can message me. I look forward to more subscriptions. I look forward to seeing more likes. Do your job, and I'll do my job. Have a good day.